Hi, good day, trader. My name is Vasco Smart FX. Welcome to our channel. In this video, we'll be talking about the market structure, looking at the intermediate time high, intermediate time low as an entry pattern. Yeah, we started this topic, I think, some few weeks ago, where we talked about intermediate time high, intermediate time low as an entry pattern. And today, I'll be giving you another examples on gold, the one that plays out on the live chat, like on the live group. I drop the trade in the group and it plays out. Okay, and before I start, I would like to like throw out the patterns. One thing about this pattern is that uh you need to have a drawn liquidity. You need to have higher time frame bias, like drawn liquidity plus direction of higher time frame. You can't just go on the chart and start looking for pattern anyhow. So after having a drawn liquidity, then you have a narrative. All these procedures talked about them in my video, talking about five foundational level, talking about your bias, your narrative, your context, your entry pattern, and your risk management. So the bias, you need to have a bias. Like that's a very essential and beginner standard. You need to have a bias. And before you even look for the pattern, you need to have a narrative. And sometimes I do say, okay, you can have a draw on liquidity, then you can look for the pattern as a reversing pattern. I call it a reversing pattern. Okay. Um, for people that don't that this is their first video, they don't watch the previous one. Let me just draw it out so that everybody can see it. Okay. I want to write my chart. Okay, I've write my chart. Okay, this is what I'm talking about. Let's say we have a bearish order flow here. Market is bearish and here market has been bouncing back on fair value gap, and here we have a fair value gap here. For market to continue the sell, like for market to continue the sell, we have a fair value gap that okay, we expect market to come back then and go like this, like for continuation of the sell, right? That is our expectation. But what market now did is that the moment market enter into the fair value gap, then trade reacted. There must be a reaction from the fair value gap. The reaction from the fair value gap shows that the fair value gap is actually valid. It shows that the fair value gap is actually active. It shows that the fair value gap is a right PVR. So you need to let market to react. So the way market reacts from the fair value gap like this, but guess what? Market is not getting to the low. The previous low that market created, market did not get there. So market breaks the high that once traded into the fair value gap. Then the main market breaks the high that traded into the fair value gap and creates another fair value gap in the opposite direction. So before we have a very fair value gap, then the main market breaks the high that once traded into the fair value gap, it creates another bullish fair value gap. So this bullish fair value gap is more stronger. That is what I call a reversing pattern. And guess what? It's not just about reversing pattern alone. There is intermediate time low. This low here is called an intermediate time low because we have a lower low to the right of it, to the left of it, and we have a lower low to the right of it. That's what makes it an intermediate time low. And you have a fair value gap. So expectation is that market should come to the fair value gap. Then now, where you want to put your take profit, it depends on your draw on liquidity. And for me, don't guess what? I always tell you 1 to 2 is the best place. Okay, for the sell is just a reversing, like the reversing one. Let me just draw it for people that have a low IQ. Okay, so market was able to break this high, then it breaks this low again. Then so this is what I'm talking about. Oh, sorry. Okay, this is what I'm talking about. This particular place is what I'm talking about. So we have intermediate time high. So that's what we are talking about here. Okay, let me go to the chart and show you the gold trade I'm looking out for. So this is the first one I'm looking out for on higher time frame. No, before I took this trade, I have a narrative. So, but because of the time, I don't want to let us to dive into the narrative. There will be a separate video for talking about the narrative and draw on liquidity. So on here we have markets. is bearish. You can see that market is bearish here. Let me just zoom. You can see that the market is bearish here. You can see market is bearish, bouncing off from a fair value gap. Market bounce off from a fair value gap, then break the structure here. Then there's a fair value gap here. So people always ask question, which fair value gap should I use? Anyone you can see that this one here is active. Yes, market enter into the fair value gap, then trade down. So market breaks it. The way market breaks it, market did not create a new fair value gap. So possibly, let's look at the second fair value gap. So the second fair value gap, the market trade into it, break down. Then the way market breaks the high, we have a new fair value gap for bullish. So that is the entry. Now we have an intermediate time low. Intermediate time low, a lower low to the left of it and a lower low to the right of it. So the fair value gap is our entry. Then from here you can put. This is how you put the stop loss here. This is where the stop loss will be. The low that reacted from the fair value gap. That's where the stop loss is. This is where the stop loss should be. And 1 to 2. As always, I always advise people 1 to 2. Let me show you on the Telegram channel before we move forward. Okay. Okay, this is trade here. You can see the trade here. You can see how I enter the trade. You can see where I put my stop loss and where I put my entry. This you can see where I demarcated the fair value gap that traded into the fair value gap into the high that traded into the fair value gap. That is what I'm talking about, and you can see the take profit here. How I told them that 140 pips is take profit. So this is the exact way I took the trade. It is called a reversing pattern. When market was once bearish, then the main market want to change the structures, then I can possibly look for intermediate time low to go for buy. So this is an intermediate time low to go for buy, and this is the way to look for intermediate time low for reversing pattern. Don't forget one thing. I told you from the beginning that you need a narrative and you need a draw on liquidity for you to look for this pattern. You can't just open your chart and be looking for any pattern. You are going to see millions of these and you are going to have a millions of losses on the chart. So you need a narrative. You need where that you feel like market should reverse from. So that is the first one. So people can be like, oh, it's just the luck. Okay, let me show you another one. Okay, where is okay? This is another one here. Guess what? I have a narrative here. There's a fair value gap here on what's it called on 4 hours chart. I'm looking out for buy. I'm looking out for buy on 4 hours chart before I go down to lower time frame. This is 15 minutes, and here also I have a bearish, the same pattern, the same way, like the same way. I have a bearish market was bearish all through. Then the moment market get to this place here, there's a fair value gap here for market to continue the bearish, and let's say we have a fair value gap here too. Yeah. So the moment market enter the fair value gap, this first one is not used because you can see that market did not reject inside it. So the second one, this is what market use. Market enter into the fair value gap, then trade down, show a rejection, then market breaks it. When market breaks it, a new fair value gap was created here, and that is my entry. Stop loss here 1 to 2. So 1 to 2, and you can see how market eat the take profit. Let me show you on my Telegram channel. I took all the trade actually, so it's not it's not like I'm trying to just tell you something that is not real. So this is the chart here. You can see how market enter into the fair value gap. You can see how I demarcate the intermediate time low, this intermediate time low, and the entry, stop loss, and the take profit 1 to 2 always. Just you see that there's a blue line, there's a blue box there. It shows that there's a narrative on higher time frame. I wanted to see a reverse. I wanted to see buy. That is why I go down to lower time frame. Don't go down to lower time frame if you don't have 4 hours of daily chart narrative. Don't go down to lower time frame. So you can see the take profit here. So that's it. Don't forget to like, share, and subscribe. Don't forget to like, share, and subscribe. Thank you so much.